Is this the end of the road for Chinese EV makers? After showing impressive growth in the EV market, the Chinese EV industry seems to be collapsing now. Growth has slowed down compared to what it was a year ago, and it is likely we won't see a recovery anytime soon. So what caused the collapse of the Chinese EV industry? Stay with us as we explore what is happening behind the scenes. This is going to have a greater impact than you can imagine. First possible reason is the overall slowdown of the Chinese economy. The slowdown of the Chinese economy and manufacturing sector has been a significant concern for both China and the global economy. China's GDP growth is expected to slow to around 4.5% in 2025. While public infrastructure spending and high-tech manufacturing investments are expected to grow, there's a general slowdown in private sector investment. There has been a significant decline in exports, which fell by significantly in 2023, and the year was marked with months of successive decline in exports. This economic downfall is seen in the employment rate of the country too. The urban youth unemployment rate reached 21.3%, the highest ever recorded in the country. Then there is the issue of currency devaluation too, with the yuan falling to a 16-year low against the US dollar in offshore trading. How has this affected the Chinese EV industry? Well, in a lot of ways.
Expecting any meaningful recovery in Chinese property market in 2024.
At first glance, all seems to be well. Chinese EV companies, particularly BYD, have continued to thrive, with BYD manufacturing over 3 million new energy vehicles in 2023, surpassing Tesla's production for a second straight year. But what you probably don't know is that this growth has been supported by the government giving BYD a lot of money. Practically, the Chinese government is propping BYD up in an attempt to make a statement to the international community. The EV market has been of particular interest to Beijing. The Chinese government's policies designed to support EV growth have contributed to a robust, developing EV ecosystem, with many EV startups pushing new, mostly locally designed EV models into the market. But this is like a bubble. With time, it will burst, and we have seen serious collapse in the Chinese EV industry, but it is only obvious when you look away from BYD. Now, just how bad is it really? Major EV companies, particularly in China, have reported significant financial losses. For instance, NIO reported a net loss of over $600 million in the third quarter of 2023, and XPeng's net loss was over $500 million in the same period. These losses are attributed to various factors, including intense competition, which has led to price wars and reduced pricing power for smaller EV makers. Additionally, the economic recovery in China has been slower than expected, affecting consumer spending on large purchases like electric cars. That is not all, it is even worse. WM Motor, once a promising startup with substantial funding from tech giants like Baidu and Tencent, has filed for a pre-restructuring process, which is indicative of the problems the company is having. The company cited operational issues, a sluggish capital market, and volatility in raw material prices as reasons for its financial struggles. WM Motor's annual losses doubled to 8.2 billion yuan over the 3 years. Another big EV company feeling the heat is Hi-Fi Auto. This high-end EV manufacturer has also faced financial hurdles it may not recover from. The company had to suspend production for 6 months due to a lack of capital. Hi-Fi Auto's challenges include unpaid salaries, canceled bonuses, and reduced executive salaries. The company's future is uncertain, with rumors of potential acquisition or financial restructuring. These issues are despite China being the world's largest EV market, with production reaching 3.5 million units in and revenues of approximately $102.2 billion. China is known as the manufacturing capital in the world, but check this out. The GDP expanded at its slowest pace since the mid-1970s, with a growth of 3% in 2022. And by 2023, China's slowdown shaved 9% off the manufacturing industry's profits globally. These indicators and figures suggest that China is facing a multitude of challenges, including structural issues such as debt and demographics, as well as external factors like its relationship with the West. Some experts say the problem is market saturation. The automotive market is experiencing saturation, which poses a challenge to the growth of EV makers.
巩固和增强经济回升向好态势，实现经济行稳致远。
Next is something even more interesting. To the advantage of buyers, there is a huge price war going on with EV makers all trying to make the cheapest EVs without compromising on quality. They have no choice but to slash prices because the EV market is oversaturated. Demand for EVs is not as high as the amount of EVs being produced. China's EV market is crowded with a multitude of manufacturers, both local and international. This abundance has led to fierce competition as companies vie for consumer attention and market share. The situation is further intensified by the fact that China is the world's largest EV market, making it a critical battleground for automotive companies. In an effort to maintain or increase market share, companies are resorting to offering substantial discounts. This trend is not limited to local brands. Even prominent international brands like Tesla have been reported to slash prices on their electric vehicle models to stay competitive in this aggressive market. With this type of competition, Chinese EV makers almost have no chance of succeeding. Think about it. The only way is to subsidize, and most of these companies are new. They need profits to survive, but are forced to sell lower than they should just to manage some sales. Even Tesla is struggling to keep up. Tesla's second largest market after the US is China, but the Chinese manufacturers are forcing Tesla into price wars. In 2023, Tesla faced significant challenges in the electric vehicle market, leading to several price adjustments. Now, Tesla is focused on producing its cheapest model yet. This model will cost only $25,000, but it will be the smallest EV Tesla ever produced. This is most likely in response to the cheaper EVs BYD is producing. Let's talk about BYD, the company redefining EV production. What is the situation of the company? BYD found itself navigating through stormy weather. The company, once hailed as a titan of industry, faced a daunting challenge that threatened to capsize its once sturdy ship. The problem with BYD is its heavy reliance on the Chinese market. BYD's sales plummeted by 43% in the first quarter of 2024 compared to the last quarter of 2023. This significant decrease in sales led to a fall in stock value as investors reacted to the changing tides. The decline was so pronounced that BYD had to hand back the title of the world's biggest EV seller to Tesla. In a bid to stabilize the stock prices and restore investor confidence, BYD announced plans to buy back shares. With a proposed expenditure of 400 million yuan, which is approximately $55.56 million, the company aims to lift its stock price amid concerns about escalating competition. You won't believe the number of Chinese EV makers that has gone out of business recently. The landscape of Chinese electric vehicle makers has seen a significant shift after a period of rapid growth. Initially, the market was crowded with an estimated 300 EV makers, but analysts predict that this number will be winnowed down to around a dozen or so in the coming years. A few that have survived have done so because they were heavily funded by the Chinese government. The Chinese government has provided at least $3.7 billion in direct subsidies to BYD Company, the Chinese EV giant, as part of Beijing's push to dominate the EV market and other clean technologies. This substantial financial backing represents a significant increase from previous years. The direct subsidies to BYD surged from $250 million in 2020 to $2.5 billion within just 2 years.
BYD is so much ahead of Tesla in China, it's almost ridiculous. You could understand why some people would sell BYD stock at 50 times earnings. At the current price of BYD stock, little
BYD has been able to leverage this government support to strengthen its position in the domestic market and expand its global footprint. The company's success has raised concerns among competitors and regulatory bodies alike. The European Union, EU, has launched a formal investigation into the Chinese EV industry, including BYD, citing allegations of unfair subsidies and bank lending campaigns from Beijing. The EU aims to address the influx of cheap high-tech imports flooding European markets, which poses a significant challenge to local manufacturers. It has been able to undercut Western manufacturers on price in China, offering vehicles like the Seagull hatchback with a 10-inch rotating touchscreen at a retail price of under $10,000. With ridiculously cheap prices like this, there is no way new EV competitors will survive.
实际上，这是欧盟、美国为首的汽车行业对中国电动汽车行业的围剿。
Do you know that Warren Buffett has withdrawn from the Chinese EV market? Warren Buffett, the legendary investor known for his long-term investment strategy, has recently surprised the financial world by reducing his stake in the Chinese electric vehicle maker BYD. This decision is particularly interesting as it marks a shift from his typical investment behavior. Buffett, alongside his business partner Charlie Munger, originally invested $232 million in BYD back in 2008, acquiring 225 million shares. This investment gave them a substantial 25% of the company's Hong Kong-listed shares, equating to 9.9% of the entire company. Remarkably, after maintaining this position unchanged for 14 years, they started to sell off their shares last year, reducing their stake to about 88 million shares by October 25th, which now represents less than 8% of the Hong Kong shares.
And after holding it for 14 years, Warren Buffett's Berkshire Hathaway is continuing to unwind its long position in BYD. It's China's largest homegrown EV maker and Tesla's major rival.
Why will Warren Buffett do this? Could this be proof that the Chinese EV industry is slowing down? The curiosity arises from the fact that Buffett usually holds on to his investments for decades, as seen with his stakes in Coca-Cola and American Express, which have remained untouched for nearly 30 years. Despite these challenges, a few key players have emerged stronger. Currently, the top 10 EV makers are expected to account for around 80% of China's EV sales, leaving the remaining companies with only a 20% market share. This indicates a significant concentration of sales among a few key players, with companies like BYD, JC Aeon, and SAIC GM Wuling holding substantial portions of the market share. The Chinese EV market remains the largest in the world, but things may not remain the same for long. We have likely reached a point where the curve begins to level out before it declines. We have some important EV updates coming in the next episode. Be sure to subscribe so you do not miss it.